Alright, ladies and gentlemen, thank you for watching, thank you for listening. This is Andrew. Now, one of the things I do want to explain today is I want to explain my take on the gold and silver market. Now, we understand that gold and silver are commodities that people have been using for, as long as men has been around. Now, we also do understand that there are certain entities or certain individuals in society as we speak who are preventing from gold and silver to gain the confidence needed in order to use it as financial transactions. In other words, they don't want people to see, the average Joe out there to see that gold and silver is worth anything at all. So you have a commodity that's been used as a financial instrument, in terms of trading, but you also have a commodity that's highly suggestible to manipulation. Now, here is what's going on for someone who's learning about this. Again, I don't have any kind of financial background. I'm not giving any financial advice. But for those who do have gold and silver, especially the physical stuff, I just want to give you my take on what's going on in terms of the manipulation and the corruption. Now, here's what's going on for those who are getting into learning about this but don't quite understand this. And of course, towards the end of the video, if I misspoke about something or I give a wrong factual information, just let me know, because I'm learning about this just as much as you are. Now, here's what's going on as far as the manipulation is going. And let me first explain a little bit of history of gold and silver here, at least in the United States. Okay, in 1971, Richard Nixon, the president back then, had taken us off from the gold standard. Now, what he did there was he said, "I'm going to take." What happened before that was the United States dollar was pegged to gold and silver. So, whenever you needed to trade a dollar for gold and silver, all you had to do was go to the bank and say, "I'm here to claim my gold," or "I'm here to claim my silver." Well, what happened was in 1971 was a theft had occurred overnight, bureaucratic theft. Richard Nixon came in and said, "All right, we're going to take the U.S. dollar off the gold standard, and we're going to allow confidence to reign supreme within the U.S. dollar." In addition to that, also allow for oil to reign supreme, the dark gold, as you will, the black gold, to back the U.S. dollar. Of course, when you have a situation such as that, black gold being backed by the U.S. dollar, that meant war. That meant going into countries that we have no business being in to extract as much oil as we possibly can and to sell it within U.S. dollars. Now, let me go ahead and, now that I explained a little bit of history with that, let me go ahead and explain the manipulation itself and how the markets work. Now, here's how the markets work. Gold and silver has two markets. It has a paper market and it has a physical market. The paper market is what you call the COMEX. Now, the idea of the paper market versus the physical market is when you buy through these various investment channels, when you buy a claim to a certain amount of gold or a certain amount of silver, and you decide a month or 2 months later, or maybe a year later, you want to make a claim on that physical gold and silver, then you're supposed to be allowed to do that. You're supposed to be able to, if you were to buy 1 ounce of silver within this piece of paper, and then decide, all right, I'm going to trade this paper and get that 1 ounce of silver, you're supposed to be able to do that. Now, here is a little bit of what happens in terms of manipulation. Now, it's the same thing with what happens with the U.S. dollar now that the U.S. dollar is being printed $85 billion a month to fund the treasury market and as well as the housing market. What they do is, what the major banks do, J.P. Morgan being at the center of it, they print contracts. And just because they print paper contracts doesn't mean that they're extracting more gold and silver out of the fields, out of the mines. Now, and because they're printing excess amount of paper contracts, they can't fill the obligations of the physical market. So therefore what happens is they take what they print. Now, let's say right now gold is at 1241, and let's say it starts creeping up, and they don't want gold to exceed $1,300. Now, let's say gold goes from 1241 to 1275, okay? And they decide, all right, it's time to start dumping the price. Now, then once they decide to do that, they take the paper, they dump it all into the market, they sell it back, even though it's just paper, gold, and silver. They what they do when they do that, that destroys the price of gold and silver. Now that's just the paper market. That's not the physical market. Now, here's how the physical works. You could buy the physical at the paper price, but what you're also paying is the premium. So you're paying the spot price, but then on top of that, you're paying a few extra dollars for the premiums. And that's how the physical works, which isn't too much different than what happens in the paper market, except in the paper market, you can print more and more paper contracts and dump more and more on it, depending on where you want gold and silver to go. Now, that's pretty much just how they cap it. Let's say gold decides to go from 1241 and it goes to 1300, it finally reaches 1400, which we've seen various times throughout the year. They decide it's getting out of control, it's increasing way too fast. We need to go and do something. Alright? We need to go and do something. So what are we going to do? Alright, here's what we're going to do. We're going to print thousands upon thousands worth of paper contracts, and we're just going to dump it all at once. Just slam it down in the market. You're going to slam the prices down of gold and silver. You can destroy people's confidence. People holding it and not understanding the markets will say, I lost so much money on this. It doesn't matter if they're printing $85 billion a month, which is probably a lot more than that, but let's say it's $85 billion a month. People who don't quite understand this are going to say, my confidence is shot here. The price have went down. I need to sell this. I absolutely need to sell it. I can't keep holding it. It's too volatile for me. And there you go. That's what happens. When they slam it down like that, it's designed to destroy the confidence within gold and silver. Because people know, or the major banks know, that people aren't going to look at the physical price. They're going to look at the paper prices. Now let's go ahead and let's go a little bit deeper. Now, what happens also when they drive prices down like that, they make it cheaper for the banks themselves to buy it up for themselves. And it also makes it cheaper for foreign entities to buy it. So whenever we or JP Morgan slams the prices down, that's when a country like China or India will go into the gold market and will buy it all up, forcing prices in those respective areas to increase dramatically. Meanwhile, prices aren't quite affected here as much. Instead, it just goes down, but it doesn't go up. People don't run around and they buy it. People instead panic and say, oh man, I need to sell it because prices are going down, and it doesn't matter what else is going on in the economy. I got to get out before I lose too much paper currency. And that's basically what's going on in the gold and silver market, is because people are so not used to using gold and silver as currency, as transaction, as something that has value, because it takes real hard work and labor to extract gold and silver. It takes nothing to print paper. You press a little red button that says print, and there you go. You have your paper dollars. And for so long, we've all been bred and thinking, raised and bred and thinking that, wow, the only way the world can ever work now is if we're able to use paper in order to make financial transactions, to be able to buy and sell. You can't use any of that stuff. That stuff, other stuff, is just investment opportunities. We have to use paper. And people literally believe that paper is a vehicle to wealth. People believe that paper is mainly, just looking at the time, how much time I have. Well, I went a little bit over, but anyways, I'll try to upload as much of this as I can. But it's just get the gist of what I'm saying is, gold and silver are prime currencies. It says it in the Bible. In order to actually make real transactions, you need to use gold and silver. Also, to mention as well, really paper currency, the Federal Reserve note, was only supposed to be used as a way to make it more convenient for people to carry, because gold and silver tends to become heavy, it tends to become a pain in the butt to carry around, so therefore the paper currency will make it far more easier to carry around, and therefore you can carry more of the paper currency around, therefore also be able to make more transactions, buy more goods and services at one trip. Alright, so thank you for listening, thank you for watching. That's my explanation of the gold and silver market. I will see you guys possibly tomorrow or whenever I decide to do a commentary video. Thank you very much for listening.